Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. Alright, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Okay, so first one I want to bring up today is SEAC, Sea Exchange International. Now, this is a software company. If you take a look here at this stock, it was up about 130% today for no apparent reason that I could find. No news. This looks like a pump and dump hedge fund scenario to me, or orchestrated by retail traders, but most likely hedge fund, pump and dump, in my opinion. You can see here that there's a lot of calls trading here. A lot of these calls are being bought here. You can see how high the implied volatility is here, 753% implied volatility. For comparison, Apple trades at, I think, 30% implied volatility. This is almost to 800%. So what I decided to do here is there was some put volume here. Most of these traded on the ask. And what I decided to do here, there's also some call volume here. A lot of this traded on the ask as well. The stock was up 130% today, so I wanted to go short this name, but I would never go out and short the stock. So I decided to go out and I got some puts instead of shorting the stock. Now I got the in the money put here, the 2-strike put to eliminate the amount of volatility compression that I will experience, because this 700% implied volatility, if this starts coming down in your long options, you're going to lose money. The further in the money the call is, the further in the money the call or the put is, the less money you're going to lose on the implied volatility compression. That's just because more of the option is made up of intrinsic value in the money value. Now, if you take a look at the chart here, this stock just had a huge move up around 11:40 in the morning. It went from about 80 cents up to about $1.24 in 2 minutes. These are 1-minute candles. So that is very suspicious. This looks like a hedge fund pump and dump thing where they're running the stock way up and then just unloading it to retail traders and pretty much just screwing us over here. So you can see after the market closed, the stock started to fade off here. So it looks like our put trade might work out well depending on how the implied volatility is acting in the morning. But if this stock continues to sell off and goes back to 80 cents, this will be a nice trade. Once again, we are long puts, so we're short. Definitely not buying the calls when the stock is up 130%. So next one I want to bring up is XPEV. Now I decided to hold off on this trade here. I am pretty cautious here. We have the Fed coming up, making some announcements here in the next couple days. So I've been playing it really cautious, adding to some of my high conviction stock positions slowly, not adding a whole bunch, just kind of sitting on my hands here. So I did not take this trade here, although there was some nice volume here in these weekly December 31st options here. These 51 strike calls, about 6,000 contracts trade, open interest of about 386. I do like where this stock is at here, but you know, with these Chinese stocks here, there's a risk of more regulation. Some of these companies delisting from the American stock exchanges. So this is kind of a loaded trade here. I would definitely not go out and buy the stock. I'd rather be in the options. So I do like that options trade. I am sitting this one out for now, and I'm probably going to take a look at this one in the morning. I'd maybe like to get it around this 200-day moving average here, this 38 level here. But we'll see what happens with this one in the morning. So thanks for everyone who has been subscribing. Make sure to check me out at Option Guru 100 over on Twitter. We'll see you in the next one.